What's up, everybody? Another week of What the F Happened. My partner in crime and I, Stephen Nagy, Mr. Snaggy, are going to dissect what's happened in the last week with the markets. It's been pandemonium, and it brings me back to deja vu. I remember 2008, 9, and 10. In the midst of the Great Recession, when I was a financial advisor, I remember deeply reading the articles. I would get up at 4 a.m. and look at futures just to see how much carnage there was going to be, because I had clients losing everything. I had clients calling me, asking me, what do I do? And I remember seeing articles about pension plans taking on crazy amounts of risk just to make off lost ground. That was a major mistake. But then all of a sudden, this week in the news, pension plans are doing the same thing. They're taking on crazy amounts of risk in order to make up lost ground because they thought, we're going to the moon. This was never going to end. Pension plans should not take on excessive risks. You should not take on excessive risks. And the mistakes are being made day in and day out. That's what we're going to cover on What the F Happened. We will be right back. All right, folks, we're back for What the F Happened, and we got a great show for you today. Got a whole bunch of stuff going on in the news, probably more than we're going to get through. And it's really one of those times where you need to sit back and you really need to ask yourself, what do I do? Because you got a couple decisions, you really do. I mean, Stephen and I talk about this all the time. You can do nothing. You can bury your head in the sand, do absolutely nothing, and wait for this thing to blow over. And now, how long would that take? On average, 7 years. Because for those of you that think this is going to be okay, for those of you that think the Fed's going to pull off a soft landing, what the hell are you thinking? What rock are you living under? We are headed to one of the worst recessions this country's probably ever seen. Matter of fact, I think it's not going to just be a recession this time. I think it's going to lead us into the next Great Depression. But hey, who am I to say that? But you know what? I'm not alone. You got people like Ray Dalio, Jim Rickards. You got all sorts of people, Jeremy Grantham, saying the exact same thing. So when you put all the data together and you really put all these articles together and you look and do some comparisons, Stephen spends a lot of time looking at articles from today and then going back to 2008, because you can archive articles from old newspapers, CNBC, Wall Street Journal, all those, and it's eerie. Stephen, talk a little bit about that. Like, how many similarities are you seeing from what happened in the Great Recession? We're only using the Great Recession because it's the most recent, really severe recession we had.
Yeah, no, absolutely. I mean, I sent you that article about the pensions the other night, and you're like, wait, is this from 2008? And I was like, wait a minute, maybe it is. I had to go back and double check it. And it was from Tuesday. And you're just like, man, that's just complete deja vu. So I went back and I started to look into it a little bit more. And I noticed how they were talking about, pensions taking on all this risk because they had to in 08. And then it started getting into like 2010, 2012. And it was saying they were kind of in trouble now because they had taken on all that risk and made some bad investments. So they were looking how they could reposition themselves to kind of recover from that. And now we're seeing where, maybe they got themselves kind of back on track, or let's just admit it, they took advantage of the greatest BS bull market, overinflated, bubble inflated, Fed induced craziness bubble in history. But nonetheless, they were able to get back up. And now that everything's popping and coming back down, they're in a lot of trouble again. And there's a lot of unfunded pensions out there right now. So they're saying, what can we do right now to take on risk, to try and do what we can? And the first thing I think of with that, Chris, is we were at a couple insurance company meetings, a couple weeks back, and there were some economists that were there. We're talking about, how the insurance companies invest and what their economic outlook is. And they're the complete opposite. because they're excited right now, because they plan for the long term, which you would think that's what pensions do. But I think there might be a little greed involved when it comes to Wall Street, right? Insurance companies have 100 plus year track record of making these very conservative investments. So when they were all excited about what's going on, they're not taking on more risk. They're staying on track and doing things the right way. While these pensions are over here, because of all the greed and everything they've had, completely panicking, not knowing what to do. And that's one of the things that I love about what we do with, the infinite banking and privatized banking is we warehouse our wealth in these very smart, safe, conservative places. And it just makes such a big difference, Chris.
Yeah, I remember, I'm just going to go back in time because it's very vivid. As you start seeing the similar patterns and the similar signs today, it brings you back to 2008. And I remember it vividly. I was in the financial world. I was one of the top, advisors in the GO that I was in. And I remember me and my wife were at a convention for the company, which was Nye Life Securities, New York Life, and Eagle Strategies. Those were the companies. And we're there listening to economists back in 2008. Larissa, who's on Instagram right now, probably remembers this. And the CFO and the investment managers of New York Life's general account were talking about what Stephen just mentioned. They were talking about how insurance companies invest for the long haul. And the one thing that really caught me by surprise is they showed how much they had in stocks. Everybody else in that room was loaded in stocks because we were coming off of, 2006, 2007, great market times, just like today. And then they show the stock holdings, and it was like 6% of their entire portfolio. And I'm like, wow, do they know something we don't know? And one of their main holdings back then was Pfizer. So when you look at insurance companies, it's the best barometer for, the way to invest for the long haul. They invest in long-term treasury bonds. They invest in loans, first secured loans. They buy real estate, and they're extremely conservative. And because of that, times like this right now, insurance companies are shining. They're salivating because the last 5 years or so, insurance companies have been literally hard pressed to find opportunities because the markets were going up, but that's not the opportunity they're looking for. When the markets were going up, insurance companies were starting to say, well, what do we put our money into? In a low interest rate environment that the government and the Fed created since the pandemic, actually prior to that, since 2008, we have been in a low interest rate cycle. It's eerie because it resembles Japan in the lost decade. They've kept interest rates so low to stimulate the economy, to keep everybody spending money and everybody feeling like they're rich. And then the pandemic hit and it gave them the ultimate excuse to print another 5.1 trillion, totaling over $10 trillion of new monies that have filtered into the capital markets since 2008. Actually, it's more than that. And then you wonder why. You wonder why we have problems today. It's history repeating itself. Never to this magnitude, though. I will say, Stephen, like we've never seen it to this magnitude, which means when all this stuff is happening right now, the printing, the government, the Fed's action, the interest rate increases at alarming rates, 0.75, they are downright vigilant in their pursuit of killing inflation. And what they're going to do to kill inflation is kill the stock market. They're going to kill the economy. Mark my words, folks. If you don't believe me, you obviously have never paid attention to history at all. Like, it's a shame because everything you're seeing right now, you would have learned in grade school, in high school, in your economics class, and in your history class. All of this is painted out right there in front of you. Exactly what's going to happen has already happened in the past, but never to this magnitude. There's never been this much crazy money printing. There's never been a government that is so loose in how they're running this country. And that's a shame. It really is. And every one of us are going to feel the pains for that because as my late friend Stefan Arnio said in his book, hard times create strong men. Strong men create weak times because now things have gotten too easy. Things have gotten way too easy. Government's printed money. Everybody feels rich. Interest rates have been low. Banks are flush with money. It's easy money policy, and easy money policy ends horribly. You're about to see it. You're seeing it already. Actually, Stephen, when we look at GDPs, put that up there, right?
And we'll talk about GDP, but just on that note, we heard a lot in 08 about, all the mortgages and the CMOs, the collateralized mortgage obligations, and how they bundle these things together and just that whole watch The Big Loss or read the book, The Big Short. But this right here, I just saw a couple days ago. Should the Fed start selling its mortgage holdings at a loss to fortify its inflation fight? You know, the Fed has their balance sheet is so out of whack right now. They're sitting on an estimated $500 billion loss from their mortgage holdings right now. So do they dump that? Like there's so many things that they could do that are just going to just destroy the markets, and we'll see what happens. But there's a lot of stuff floating around out there right now.
Yeah, for Instagram and TikTok here, he's got an article up from MarketWatch. Said, should the Fed start selling its mortgage holdings at a loss to fortify its inflation fight? Well, if you've been paying attention to the news, Newsom out in California is printing more money or asking for more money to send checks to everybody to curb inflation. Like that's just retarded, but okay, whatever. But the Fed is going to start selling off their balance sheet to a tune of $95 billion a month. That is going to be sucking all the money back out that they just printed and put into the markets. That's like somebody on here. I'm just trying to get to it here, you know, because it's important we try to make our audience part of this. KJ Prince on TikTok said, pump up the fear. So we're not trying to pump up the fear, folks. This is what the F happened. This is a week in review in the markets. Everything is what was in the news last week. So we're not pumping up the fear. You know who pumps up the fear? The media. What we're talking about is bringing certain aspects of the media, the fear monglers, to you so you understand that now is the time for you to take some action. Now is the time for you to do something about it. So you might call it pumping up the fear. The media already pumped up the fear, dude. Like, it's not us. We're just reiterating what's in the news, but doing it in under a microscope so you know what to do. So I don't know if that was a comment, you know, just kind of saying pump up the fear. It's important that we pump up the fear because people aren't taking this serious because everybody still feels rich. So another, you know, I want to hit some of these things, but real quick, let's hit this, Stephen. This is important right here.
Yeah, I mean, just on that point, I mean, this is just kind of a you know, straight from Barron's, you know, what else is happening in the stock market today? You know, stocks were trying to find their footing Wednesday amid renewed concerns. You know, we're kind of hovering right now. We're up just a little bit in the Dow. Looks like the NASDAQ and the S&P are just below level right now. So there's a lot of concerns right now, but overseas, the pan-European stocks lost 1.3. Hong Kong tumbled 1.9%. You know, followed Wall Street's downbeat performance in the last session, though Tuesday started off fine. Stocks ended up suffering their worst day in 2 weeks as investors soured on downbeat signals from the consumer confidence index. And we talk a lot about that, Chris, and we'll talk about it later today as well. But the consumer confidence index is one of the things that's kept things propped up to this point. So as that starts to waver right now, that's really going to start things. So there's no fear mongering going on. We're reporting the news, like what's actually happening right now. Now, if you want to go out there and follow people like Jim Cramer that are telling you to buy Robinhood and buy all these stocks and everything's great, good luck to you, buddy. But we're going to report to you what's actually going on. And the last thing I'll end on this article is not only did the headline badly miss expectations, falling to a 16-month low, but consumer inflation expectations for the year ahead within the report jumped from an upwardly revised 7.5 to 8%, which notably contradicts the pullback in the final University of Michigan data. So there's people out there telling you good things, but the real data is showing it's a lot worse. I mean, we'll get into GDP right now as well and talk about what's going on with potential recession talk, but I'll show you some GDP stats in just a second here, Chris.
Yeah, and let me just hit some of the comments, and this makes me feel good. You know, a couple people, somebody from TikTok came on and said, I'm a teacher and I don't feel rich. You know, I think teachers as an occupation are one of the most screwed over occupations there is. Like if you think of like the most important thing for a nation, for an empire, the United States of America, it's education. Our young children, our children need to be educated at a much greater level than they are now. And teachers are underpaid and always have been underpaid for that matter. They don't get the respect and they also don't get the pay that they need because their job, in my opinion, is far more important than most other people's because they are the starting point for this nation's future. And so teachers, like the fact that you don't feel rich is because you're screwed. You know, Stephen's wife is a teacher. I think, is she still a teacher?
Yeah, we'll say that.
Yeah. So she's still a teacher. And I know a lot of teachers and I know you don't feel rich because they just don't compensate you the way that they should. The benefits, you know, although you get a pension, but that pension isn't that you can't survive on that. Maybe the old tier one pensions, but not the new ones. What's that?
She didn't even have a pension. So
yeah, I know. I'm talking the old teachers, you know,
right.
Back when I was an advisor, the big thing I'd meet with teachers and they'd say, oh yeah, we have a tier one pension. I'm like, wow. You got the ultimate thing. No teachers have that anymore. So the other thing too, a couple other people were commenting here saying that they don't feel rich. So maybe the tides are changing, but I will tell you during the pandemic, in a time when everything's going up, real estate's going up, stocks are going up, crypto's going up, everybody did feel rich. And when you feel rich, you spend more money and you take on more debt. During the pandemic, one cool thing we saw is people started paying debts down. They started saving more money. Actually, savings rates in this country during the pandemic were the highest I think they've ever been, for that matter. Maybe they were a little higher back during the Great Depression and right after that, but they were one of the highest we've ever seen. And debt levels were going down at rapid paces. Credit card companies were actually getting nervous. How many of you during the pandemic started getting those checks mailed to you from the credit card companies? It's because they were getting scared. They're like, wow, people are paying us off? Not good. Because debt is their business. Debt is how they make money. The same with the Fed. Debt is a profit center for them. They print money, they exchange it for debt, and debt is the trap. It's a trap for everybody. So, I want to also hit one other thing, Stephen. We're talking about the news, but this is really important. 3 people so far have said, Lorraine 3978 and many other people said, well, what do we do? Okay, let me give you a couple pointers as to what to do. We have these little glimpses of hope when the market goes up. The market shoots up. You should really be watching. If you have money in the markets right now, you need to be looking for your exit, right? It's like you're driving down the road and you're waiting for that next exit because you got to piss. We've all been there, right? We're on the thruway. You're waiting for one of those little rest stops. You can't wait for the next sign that says rest stop 1 mile. You need to be looking for your exit, okay? Because if you don't, it will be far too late. For some people, it's far too late now. But the good news is you had the longest bull run in history. So most of you still, even after we've shed 20 to 30%, still have gains. So you need to be looking for an exit. And you might say, well, no, I'm in this for the long haul. Trust me, investor sentiment will fail you on that one. If you're in this for the long haul, I hope you got some deep reserves, and I hope you got big cojones, because you're not going to want to hold this one out for the long haul. What else should you do? Well, let me just tell you what we're doing here. Okay. Privatized banking is something that we put all of our money through, especially designed and engineered whole life policies, not trying to kind of push you there, but you really need to learn about that. Because it's not just us, it's these insurance companies, it's the banks, it's also the wealthiest families in history. They're putting unbelievable amounts of money in specially designed and engineered whole life. Wouldn't you like to know why? Is it because they're stupid, or do they know something you don't know? Well, I'll tell you the truth. They know something you don't know, just like we do. That's a big place your money should go. But if you don't do that, then another thing you could look at are, number one, if you're trying to beat inflation, check this out. This is important. They're called TIPS. And I don't mean I'm giving you a tip. I mean, they're called TIPS, T-I-P-S, Treasury Inflation Protected Securities. The auction just opened up in May and it closes in October. The new I-bonds, okay, which are government issued bonds, they're called Treasury Inflation Protected Bonds because they trend inflation. Inflation's on the move up. The Fed's trying to curb it, but right now you can buy bonds risk-free because they're guaranteed by the government's full faith and credit, okay? You can buy these bonds and they pay 9.62%. So if you're looking for a place to kind of sit and just wait this out and kind of beat inflation, there you go. I-bonds. Tips. Go to treasurydirect.gov. We don't get an affiliate. It's a government website, folks. Go to treasurydirect.gov. Look it up. It's what I'm putting money in. The problem with tips is you can only put 10 grand per person per entity in it. You got to trust that also counts as an entity. So there's one other thing. Treasury bonds, okay? Where are the insurance companies loading up on? What are they putting their money into? We just got back treasury bonds, okay? 10 and 30-year treasury bonds. They're the most boring things in the world. Talk to your advisor. Your advisor will call you crazy for wanting to buy treasury bonds, but you know what? What do they say? Stupid is as stupid does. Financial advisors all understand the inverse relationship between bonds. They should understand why treasury bonds are a great buy right now, because Warren Buffett says, buy low, sell high, and don't lose money. So you want to make money? Buy the assets that are going down. And some of you are like, oh, stocks are all going down. Stocks will still shed. We're not even through the first phase of the drop. If you think like we're at the bottom, or you think this is a buying opportunity, well, I'm seeing a lot longer, and I'm seeing about another 30 to 50% shed in the stock market. So believe me, be very cautious if you're buying stocks right now. It's a trap. So treasury bonds, however, are going down because interest rates are going up. And when treasury bonds go down, you know that they're going to go back up when the Fed drops interest rates down. Now, you might be saying, yeah, but the Fed's raising rates. Exactly. Rates go up, price of bonds goes down, creating a buying opportunity. When we get deep into this recession, the Fed will do what they've always done. They will drop interest rates yet again. Another year, maybe 2 years from now, somewhere in that mix, the Fed will come in and they will drop interest rates to stimulate us and try to pull us out of this deep recession we'll be in. When they drop interest rates, the Treasury bonds will skyrocket. It's called the flight to safety. If that doesn't sound like a good investment, then you are seeking too much risk. You are going after unrealistic returns, and there are no more returns right now. If you think there's huge opportunity in crypto right now, crypto is still going to continue to go down. I'm buying it on the way down. Dollar cost averaging, that's another tip. You want a big, not a tip, but you want another thing to do? Start dollar cost averaging. Every week, every month, take $100 to $500, whatever is in your budget, and put it into whatever investment you know, like, and understand. If you're investing in real estate, I sure the hell hope you're investing in real estate with a very long-term time horizon for your exit and with an income strategy only, because real estate is certainly going to get hit. Matter of fact, you're already seeing it in parts of the country. You're seeing real estate start going down, but nobody's talking about it because that's a scary thought that we could see similarities to 2008 in the real estate market, but we will. Not every part in the country, but we will see drops in real estate. So those are a couple tips. I wanted to make sure I put that out there. So to recap, review your assets. Look for the exit. Think of the exit sign on the throughway, okay? Secondarily, look at TIPS, Treasury Inflation Protected Securities. That's a great hiding place to fight this inflation. Treasury bonds, guaranteed by the full faith and credit of the U.S. government, 10 and 30-year U.S. Treasury bonds. Look them up and try to find a way to buy them or buy an ETF that they're invested in. As always, the infinite banking concept will always be the leader in all of this because your money in motion and the spread that you can make on a guaranteed basis will always trump everything. So you wanted some tips, some things to do. There you go. But now here's the problem, Stephen. We do this all the time. I just gave them some great information people pay a lot of money to get. How many of you will actually do anything with that? Well, I can tell you here, if I put this one thing up, we've got some great comments coming in here. Let's see. Juan said, finding you guys in the beginning of 2022 changed the entire trajectory on my life. Just wanted to shout you guys out and give thanks. Life changing. I look forward to one day. Thank you guys in person. Well, Juan, come on out to our event, July 30th and the 31st here in Buffalo, New York, and you can thank us. But Juan, thank you so very much. Juan's coming in from YouTube. And there's a lot of other people that would probably say something similar to that. But those are people that actually took action on the knowledge we give. Too many people, it goes in one ear and out the other, and they listen to the talking heads. They follow the idiots, the gurus. They follow them right off the cliff. And the reason they follow them off the cliff, and I don't mean to be rude, but financial advisors are one of the worst. It's because they're giving bad advice today. Just throwing it out there. Not all, but a lot of the financial advisors are giving awful advice. They're telling people to stay invested. They're telling people to keep investing. Now, that might be good if you got a long-term time horizon, but in 2008, 9, 10, people that had long-term time horizons didn't because reality set in. They lost their jobs. They didn't have income. They needed to take their money out of the markets at the worst time because they waited thinking, I'm going to wait this thing out. But then reality set in because when a recession hits, folks, jobs will go away. Right now, the job market's perfect, like it's prime. Everybody's hiring. Well, not anymore, but everybody was hiring. It wasn't hard to find a job. We got very low unemployment rates, which is one of the reasons why the Fed's taking massive action. They're trying to slow things down because everybody's working, everybody's making money, and everybody's spending money. They need to get a hold of that, and they're going to at the expense of our economy because they fucked up. No disrespect to the Fed, but they fucked up, and they know it. They acted way too late, and we're all going to suffer because of it. Not trying to hate here, but it's the time to take action. Stephen, what else we got here?
Yeah, I mean, just to back you up on that, I mean, you can, Jim Coulter is a billionaire investor is saying the same thing. Jim Coulter says that declines in stock market multiples are the first chapter in a downturn, and that is largely now complete. So multiples, just what he's talking about, are when you look at profit to earnings ratios and things like that, when, what a company's valued at versus what its actual earnings are, it's been very lopsided. A lot of companies, especially in the tech sector, places like Tesla, companies like Meta and things like that, they don't bring a lot of money in, but they're valued very, very high. Things like Uber, things like Snap, a lot of these stocks that we've seen these major declines. And so those multiples have just been so out of whack. So that's what they're talking about there. And then, however, what comes next will further weigh on stocks as inflation hits earnings across the S&P 500 and current expectations prove to still be too high. There will be a time when cash should be put back to work in the broad market, but not yet, he said. So like you're saying, we need to just still be very smart. It's not the time to buy back in. It's not the time to be greedy when others are feel for. It's right now. It's time to sit back and let things happen, because we're not even close to seeing this thing go to where it's going to go to.
I agree. And it's interesting that you just said that. Like, a lot of people want to jump in the market thinking there's a buying opportunity. A lot of people are jumping back into crypto. I said, somebody sent me an email. I think it was an email or a direct message saying, should I go all in on Bitcoin and Ethereum? Now, although that, like, at that time, I think Bitcoin was sitting around 18 or 19, like, that seems like it's a good buy. And you know what I did? I've been buying, like, when it gets down around 18, I've been buying like $3,000 here. I'm always buying $200 a week, 100 of Ethereum, 100 of Bitcoin, but that's just dollar cost averaging. But I truly, truly believe, because of the total correlation of crypto, and I'm just broad basing crypto, and the markets, when the markets shed more, which they will again today, they did yesterday, it was a ping pong day, but when they go down, crypto will follow it down. I think, and wholeheartedly, I think Bitcoin will see 10,000 in a not so far off future. So if you went all in today at 20 and Bitcoin fell to 10, and that's speculation, folks. I'm not an expert in Bitcoin, but I know the markets really well. And every time the markets fall, crypto falls. So that means Bitcoin. So if you're going to buy at 20, if it lost half of its value and you went all in, how would you feel? Probably not very good. Real quick, I want to just give a shout out to someone here. Veggie Vampire said, I'm making money in my rentals, so I don't really care what someone says it's worth. Now, that's the only way you should invest in real estate, is exactly what Veggie Vampire said. I don't give a shit what the value of my property is now or in the next 5 or 10 years, because I'm making money on the rents. And you will continue to make money on rent. Stephen, what did you have up there?
Yeah, just talking about Bitcoin, it's roughly fell. But what I was going to point out on there was just the fact that it's saying, Bitcoin fell below 20,000 on Wednesday as a number of factors, from macroeconomic worries to issues with cryptocurrency companies, continue to weigh on the market. And, we were told for so long that this was the hedge against the stock market, and this was a hedge against inflation. But Bitcoin just mimics it perfectly. And, whatever's driving that, or wherever that's happening, it's not what was supposed to happen. So, if you think the market's going to come down, don't think that Bitcoin's going to be the inverse to that and start going up. It's mimicking it. So if you think the market still has room to fall, which I do believe it has a lot of room still to fall, Bitcoin should have a lot of room to fall as well, in my opinion, at least.
Yeah, I agree. And I do want to give a shout out to Andrew here. This morning, he brought me this can. Now, I'm not a big energy drink person, and it says Liquid Death on it. I don't know if you can see that. Liquid Death. So we got a can of Liquid Death. And I'm like, oh, what is this? I don't really do monsters or anything. Those things will kill you. And Liquid Death sounds like something that'll kill you. You know what Liquid Death is? Water. It's like drinking warm tap water. That's what it is. It's not very enjoyable. But they market it as Liquid Death. I guess you can die in mountain water. I don't know. But, I don't know. Little side making it fun. But, yeah. God, the way people market it's pretty interesting. What was 9.2%? So Ryan, Ryan Top was asking on TikTok, tips, Treasury inflation protected securities. They're I bonds. You can go to treasurydirect.gov or just Google tips or I bonds, and you'll see the new issue, the auction that's going on right now that started in May. They're 9 point, and now I'm going to screw up the amount, but they're over 9%. Okay, that is what they're paying. You have to hold them for a year. You can only buy $10,000 per person per entity, but great way to hedge against inflation. I mean, that's what they're designed to do. We got a lot of other stuff in the news. Let's talk.
One thing I wanted to hit on, Chris, just GDP for just a second. So we're going to hear a lot of news. Now, this is a little bit more basic, so we'll go on it pretty quickly. But I just want everybody to understand what GDP is real briefly, because you're going to hear a lot about GDP as we start getting into this recession. And we've now had 3 straight months, so 1 full quarter confirmed of downwards. So next month, when the GDP numbers come out, that will officially put us into recession territory. And then that will be confirmed at the end of next quarter. because it is a quarterly thing. Recession is defined typically as 2 consecutive quarters of negative GDP growth. So what is GDP and why is it so important? So just real briefly, gross domestic product, GDP, is used to estimate the size of the U.S. economy. It is calculated as the value of all goods and services produced in the U.S. in 2019. GDP was 21.4 trillion, just to give you an idea. So GDP measures the amount of value added in the production process. There are 2 ways of measuring the production of given product. We can look at the value at final scale, or we can look at how much value is added at each stage of production. So the bottom line is it's how much domestic product is produced here that's used. And so when we start looking at negative GDP growth, did the screen change just now when I changed screens, Chris?
No. Are you going to show the the negative GDPs that's happening right now?
Let me just reshare the screen here, because this is what. So we just came out with the final numbers this morning for the first quarter. So here we go. And let me just zoom in a little.
And make sure, Stephen, make sure you explain this, because this is single-handedly. I mean, we've talked about, the inverted relationship of the 2 and the 10-year Treasury bond, but like this right here is showing you exactly why we'll be in a recession in the not so far off future. By October, there's no question we will be in a technical recession.
Right. So what happens is each month of the quarter, they release what's called like I'll get to it in a second, the exact, what they call it, the preliminary, but and then the second quarter is the forecast. And then they have the actual in the third month. So we were forecast last month at negative 1.5. The new number just came out this morning at 8:30 a.m. Eastern, and the actual is negative 1.6. So it was actually a little worse than expected. So gross domestic product measures the annualized change in the inflation adjusted value of all goods and services produced by the economy. It is the broadest measure of economic activity and the primary indicator of the economy's health. So usual effect, actual is greater than forecast, is good for currency. But let's look at what just happened. The actual is actually worse than a forecast. So we're going to look at the inverse of that, not good for currency, right? So frequency, it's released monthly. There are 3 versions of GDP released a month apart. The advanced, which is the first, the second release, and then the final, which is what just came out this morning. Both the advanced and the second release are tagged as preliminary in the economic calendar. So when we look at the last couple of years here, we were on consistent 2 to 3% growth for many, many, many years, right? Since around like 2010. And then we started, obviously with COVID and all the craziness, and the country shut down, the country reopened, so it threw the numbers off. But as we get back into normal territory, things were looking okay. And then boom, reality set in with everything. Yeah. So the actual, or the, when the numbers first came out in April, we were at 1.4, then they forecast 1.5, then the actual that is out right now is 1.6. So it's going more and more negative. So when the next month come out, if that's negative, that's going to put us in essentially effective recession territory.
Correct. So folks, all that's saying, I know it's boring numbers. It's not something that affects you day in and day out, but these are what will technically qualify a recessionary period. 2 quarters of negative GDP, and folks, we're on our way, and we will continue that way, because there's lots of things happening worldwide, not just in the U.S. The U.S. is slowing down. Look at the news. Look at projections companies are making. Companies like Apple and Google and everybody else, they're laying people off. Look at the FANG stocks, the glorified, famous FANG stocks. They're all suffering dearly right now, and a lot of that is because we're now entering the hangover part. It's been a good party, folks. We all had a lot of fun. It's been a rager, as we would put back in the snowboard days. But now we're setting into the hangover, and it's going to be a long, strange trip that we're going to be on. And that is going to be the hangover, which is what we're approaching here. Let me just hit a couple things here, because these are really good. Somebody said, should I not be dollar cost averaging into the S&P 500? So this is from Case 34 on TikTok. No, you should be. I think dollar cost averaging into the S&P 500 is just fine. You just have a long-term time horizon. You're not going to make a lot of money on that. Matter of fact, you're going to lose for probably the foreseen future dollar cost averaging, but it is the right thing to do, because you will never find the bottom and you'll never find the top. You cannot time the market. So that is the right strategy for you, especially if you're young. Veggie Vampire said, I don't like a middleman in between my money and me. He's smart. That means he's taking back control of his money and he's not using advisors or someone else to give him advice. What should a 20-year-old be doing? This is a great question. You know, we don't often have a lot of 20-year-olds or young folks on here. TikTok does have a lot of young folks, but the average age on TikTok now is over 40. So great question for you, and that is Chase_God. And I love his title, Chase God. That is always the right path. But someone at 20 years old, I got one piece of advice and one piece of advice only. You need to start the infinite banking concept. You need to get yourself set up with a specially designed and engineered whole life, the ones like we're always talking about, and start performing the infinite banking concept. That will completely change your financial future. And at 20 years old, I mean, God, at that age, I would probably be dollar cost averaging like I am into Bitcoin or Ethereum. And I'd also be dollar cost averaging into one of the indexes. I mean, you got nothing to lose and you got time on your side. So play the game, but do not wait to get started in the infinite banking concept. Somebody else here, user and a whole bunch of numbers, said a lot of us go 401k because of the short-term tax benefits. Not smart. Not smart at all. You are buying into the biggest lie in history when it comes to your money. Your dollars, let me just put it this way, lots of numbers after user. Your dollars that you work hard for are losing value every day. These are your most valuable dollars you'll ever have. They will never be worth more than they are today. So when you work for this money, you're telling me that you're taking these most valuable dollars and you're putting them into a 401k for a future benefit. I don't know how old you are, but 5, 10, 15, 20 years in the future. These dollars are worth the most today, so they should work for you today, not in the future. Putting them in a 401k to get a tax benefit is like paying tax on the harvest, not the seed. You're getting a benefit at the lowest tax bracket you'll ever be at. We are at the lowest tax bracket. Mark my words, we will never see a lower tax bracket in our lifetimes than we are in right now. I don't care what political side gets in there. It doesn't matter. We will always be in a higher tax bracket because somebody's got to pay this shit back. Okay. Newsom and his bullshit antics of printing money, giving all of the people in California checks to fight inflation. Fuck him. You want our grandkids, our children's to pay your fucking debt so you can get elected? Fuck him. Sorry about my language. But he is a piece of shit and needs to be removed from fucking his governor position because he's ruining California. As a matter of fact, he already fucked California. All of you that live in California, I'm sorry. I live in New York, but it isn't as bad here as it is there. That governor is destroying everything that you all take for granted and everything that you guys love about California. Mark my words. Our kids will have to pay his stupid fucking election antics back. Anyway, moving on.
I guess it's not a good time to tell you that he's in the top 3 headliners for Democrat presidential nominee at the next run.
Yeah, well, you know what? Anybody that votes for him, we're not friends anymore. Don't come to my shit anymore. If you vote for Governor Newsom, I don't play politics, but we're not friends. We are not. I'm not here to give you any advice because you're just stupid. Stupid. I know that's not the right thing to say, but I don't know how else to put it. Anyway, probably made some enemies right there. So putting money into a 401k, you're giving the best dollars up to take back weaker dollars because when you're going to get the money back out of the 401k, it's going to be worth less. Plus, you're going to pay higher taxes on it. And you lost control of that money for all that period of time. I do not like 401ks. The only thing I ever say about 401ks is if you're going to put money in a 401k, only put in up to the match. That is it. What do you got, Steve?
Right there, Chris. So these are the 3 wealth killers. And if you guys are around at 1 p.m. Eastern today, join us for the wealth webinar series. It'll be Zoom. We'll give you a free link. You can go to chrisnaugle.com. Just go to wealth webinar, click it. And it's a free webinar training that we're doing today at 1 p.m. Eastern. We do it every Wednesday. But today we're going to be focusing on these 3 areas: taxes, inflation, and volatility. Why? Because those are the 3 wealth killers. And they're the people like that are commenting right now. We put our money in a 401k. You just don't understand what that really is doing to your money. So you don't understand what taxes are doing. You don't understand inflation. You don't understand volatility. And if you understood these things, you would be backing off of that 401k, possibly not putting money into it anymore. So we're going to teach you at 1 p.m. today exactly how that happens. These are the 3 things that we can teach you. And then these 3 things that are things that stop people from becoming successful. But these 3 are on you. So we could teach you these, but once you teach you got to overcome your fear. You got to overcome what everybody else is telling you in life, and you got to take action and implement it yourself. But join us at 1 today, and we're going to get in deep about that stuff right there.
Yeah, and we got somebody here from TikTok. Sharon Nickerson too said, my insurance agent wants to take my $100,000 policy and move $25,000 into whole life, and then it stops. So, for you, one thing I really advise you to do, put your head down, lazy cash. Come to our webinar this afternoon. It's free. Okay. It's every Wednesday at 1 p.m. But today we're going to be covering exactly that. People, when they hear the word whole life, they just think it's all the same. It's not. Okay, just like a Ford Focus isn't the same. A Ford Focus you buy at Ford, the dealership, isn't the same as the Ford Focus Ken Block drives 130 miles an hour sideways around a turn. It's not the same car. Okay, they're both Ford Focuses, but they're engineered and designed to do different things. Whole life can be engineered and designed to do something completely different than its intended purpose. That's what we do. You need to learn about that before you let your insurance agent do anything, because chances are if they move money into a regular whole life, okay, you're going to have no access to that money, and they're going to make a nice little commission where you want the policy designed with the lowest commission, the lowest death benefit, and the most cash value. It is a very it's a very specific way, and it requires somebody that knows how to do that. So please show up this afternoon. We will teach you exactly how that works. And if you register, just so you guys, a lot of people are asking, how do I register? You go to chrisnaugle.com. It's easy, right behind me, chrisnaugle.com, and then it'll pop up and just register. It's free. And we even give you a book showing you how to get all the money back for all the cars you're going to buy, drive, and own. Let's see. So yeah, they say the bill to give everybody money per United States. So a lot of people we got a comment Lynn just did here, and I love it. She's talking about Newsom. So just real quick, I want to hit so everybody understands why these things happen. Newsom probably will run for governor, but so will Ron DeSantis, and Ron DeSantis will walk all over him. But again, who cares? Newsom has destroyed us, and we tried to get rid of him, and it didn't work because people here are stupid. So I said the same thing. I said people are stupid, but I'm going to retract what I said. I don't think people are stupid. People are playing the short game. People are selfish more so than they're stupid. They're taking him printing money as a positive, and a lot of people do need that money. But you have to understand what you're doing and what he's doing. He's playing politics. He's playing politics, which will destroy not only California but the country. It's already happening. This democracy, as it is dead, because politicians have found a way to buy votes, and the way to buy votes is at your expense. At all taxpayers' expense. They print money. Well, the Fed prints, the Treasury prints money, but the Fed controls that. They exchange that money to the U.S. government, which then gives it to you and to the states in the form of these stimulus checks. But that is not free money. Everybody takes that little $1,000 check. They go blow it. Starbucks, new pair of shoes, new handbag, whatever you blow it on, it's gone. But what you got to understand is that's done for millions of people. That's billions and billions of dollars that now needs to be paid back to the Fed inside of 30 years. None of those politicians will be even alive. So they don't give a shit about 20 to 30 years from now. They care about getting elected today, and they will do anything required to get elected, including fuck this country for the rest of its existence and make this country, this country will not be the greatest. This will not be the empire that it is today in the next 10 years. It won't, because this political nonsense game that they're playing, both sides, of beating democracy by buying votes is going to destroy this country, because debt will take this country down, just like it took Rome down, and all the greats, all of them died on the vine because of debts.
And we're not saying it's it's going to happen even in our lifetime, but things like this is what progress to make those things occur. I mean, we're right now the S&P 500, which is the broadest measure of stocks, is headed for its worst first half since the 70s. It's down nearly 18% this year, the worst since 1970. That makes 2022 the fifth worst half performance on record. I mean, that's not good.
No, not at all. Actually, that's terrible. If any of you studied the 1970s, what happened back then was not a pretty thing. 70s and the 80s, look it up. Study the history. Like this is worse than that. So I can't tell you exactly what this is going to look like, but I can tell you it's not going to be good. And if you don't prepare, it's going to be catastrophic for your finances and for your family. If you're enjoying the lifestyle you're living today, well, then maintain it by planning for what's coming. If you don't, the lifestyle you live today will be a thing of the past. You'll talk about it and say, I shoulda, I coulda, I woulda. Repeat that with me, everybody. I shoulda, I coulda, I woulda. Those are three things you don't ever want to have to say in the next year to 2 years. Mark my words on that one. You do not want to have to say that. And you're right. So, someone here on TikTok, we got a lot of good stuff coming in on TikTok. People are lazy to do the research in the world of easy access to information. The information's right there, folks. Like we're not we're not going out like looking hard for this. We copy a couple articles and we understand this stuff because we've been through this stuff. This information is all there, but people are so short on attention span. They're just looking for the fastest thing to give them that dopamine hit, right? They're not really looking at the things that matter for their lives, because right now everything seems pretty decent or pretty good for some people. But what happens when it's not? Then you're going to be looking to fix the problem, but then it's too late. And then you start saying, I shoulda, I coulda, I woulda. Sad.
Or yeah, I mean, this guy's
Oh,
on TV.
Robin Hood. Oh, is this Kramer? Is this our boy?
Every single day. It's just
what do we got Kramer saying? Anything this guy says, folks, you should do the opposite.
I mean, look at that stock chart. I mean, yeah, it's low, but just because it's low doesn't mean it's a gosh.
Oh my God, folks. So I got to read this. So
not everything that's low means it's a good buy. Okay. Let's just start with that.
That's a great advice. But this is a picture with Kramer and his stupid face. I do not like Kramer. And it shows Robin Hood next to it, which is a straight drop down. I hope none of you own Robin Hood. And Kramer said, Robin Hood is a great opportunity and should be bought, says Jim Cramer. Do any of you think maybe Jim Cramer was paid or incentivized to say that? Just asking for a friend. I'm just wondering if anyone knows something we don't know, but I bet you he was, because that is a dog shit stock, a company that is poorly run, and a company that was built on things that are not sustainable at all. So like that's a sad one. 619 Maya said, I have 175,000 liquid and 150 in the market. I need to pull that 150. Yeah, you need to look for that exit sign to get that 150 out. The 175 liquid is great, but try to find a place where it's at least going to pace or hedge against inflation, like those Treasury inflation protected securities, TIPS, or one of the other places that I was mentioning would be a great holding place for it. But do not be in a rush to dive back in. I'm telling you, folks, don't be in a rush to do anything right now. The only thing I'm doing with my money is I lend all of it out, but I do it on very short-term loans, like 6 to 12-month loans. And I do them in a first secured position. And I only loan right now 60 to 70% loan to value. So if the house is worth $100,000, we'll just use, which very good luck finding a $100,000 house, I'm lending 60, no more than $70,000 on that house, period, in first secured position, which means the person that's buying the house has to come out of pocket anywhere between about $30,000 to $40,000. So they got skin in the game. I'm protected at least 30% on the downside. So, and it's short term. So I think real estate will at least have a little breath, a couple more breaths after the markets crash, because they always do. It's a lagging indicator, 6 to 8 months, except for the Great Recession, but that was led by real estate. Except for that one time, real estate's usually a lagging indicator. So if you're in real estate looking for an exit, you've got not much time left. I normally say 6 to 8 months, but you're probably down to 4 to 6, just calling it out where it is. And a lot of people are like, well, that can't be. All the business is still coming in. Yeah, that's how it always is. Everything comes right up to the end because everybody's rushing to get in and get their projects done. It's a false illusion, folks. Don't get caught up in that. Yeah, that's another thing. Food shortages, Stephen. We didn't even hit that because the news media doesn't want to talk about that. But if you're going to the grocery store, I guarantee you guys are all seeing food shortages. It's coming. And that's a scary, scary thought. So when food shortages start to happen, here's one thing. And, we're dealing with this. We live in a really nice neighborhood, like a protected neighborhood. It's kind of out, pretty far away from like urban areas. But we have, like, there's this neighborhood app. We have had break-ins on numerous houses. We just had this situation with this poor 18-year-old. I'm not going to get into it, but like we felt protected because we're in this elusive neighborhood. But that neighborhood is now having people come and break into cars, break into houses, do terrible things. When food shortages start and the market lets loose and people start losing jobs, none of us are protected. And they're trying to take your guns away for that matter. So none of us are protected, because when people need things, food, shelter, things that are necessary to live, they won't stop at anything. We're seeing it already. Right now, we're seeing it. And it's only going to get worse. Food shortages are going to escalate that in a huge way. It's a very scary thought. What are my thoughts on Idleman Financial? I don't know who they are. Any financial company, is it something you're investing in or something that they're giving you advice? If they're telling you to put money in the stock market, run for the hills. All right, what else we got, Stephen, as we kind of wind down?
Here's a story that came out this morning.
Oh, TikTok.
So the United States FCC, federal FCC commissioner wants Apple and Google to remove TikTok from their Apple app stores. So Brendan Carr, one of the FCC's commissioners, shared Tuesday via Twitter a letter to Apple CEO Tim Cook and Alphabet, which is Google, which is the Google Marketplace CEO, Sundar Pichai, that pointed to reports and other developments that made TikTok non-compliant with the two companies' app store policies. Alphabet, Apple, and TikTok did not immediately respond. Carr's letter, dated the 24th, said if the Apple and Alphabet do not remove TikTok from their app stores, they should provide statements to him by July 8th on what they're doing. And then the story goes on to explain, if you think back, initially TikTok was kept out of the United States markets because one of the problems with it is one of the problems is a lot of the data goes back to Beijing. So later, the wildly popular, trying to find out where I just read that. Sorry. So TikTok is not what it appears to be on the surface. It is not just an app for sharing funny videos or memes. That's the sheep's clothing, it said in the letter. At its core, TikTok functions as a sophisticated surveillance tool that harvests extensive amounts of personal and sensitive data. And then it goes on to say that they're sending this data back to Beijing and to China, where they're harvesting that data and using it for various things. Now, TikTok is saying that they've made some changes and that their data is now being sent to U.S. Cloud servers with Oracle, but there's a lot of what is actually happening with that data going on right now.
Yeah,
and it's one of those things that we've talked about. Data is one of the most valuable commodities that's ever. Nobody saw that happening. You talk about it all the time, Chris.
Yeah, and it's TikTok. It's China, so let's just take that off the table. But I don't know how many of you get your data or get some of the news from TikTok, but a lot of times it's live news and it's real news because it's just individuals reporting the news as they're seeing it right then and there. Yes, there's, conspiracy theorists on there. Yes, there's garbage on there. But if you think about where we get our news today, places like TikTok, it does seem like you're getting a little bit more of the truth there than you are on some of the other throttled sites. So, of course, the FCC wants to shut that thing down because it's the truth. Or some of the truth, regardless of, China having their hands in it or not right now, and it probably will not be in the future. I feel a lot of the stuff being reported by the individuals on TikTok is the closest we're going to get to the truth, because you're not getting the truth from CNN, CNBC, MSNBC, or all those other bullshit lies. You're getting a manipulated, made up story almost on a daily basis, even Fox News. How much of that shit can you actually take as the gospel? You can't. So that's why they want to shut it down. They don't control it. And anything the government doesn't control, and the FCC is the government, they don't want. So careful what you wish for. They're going to spin it to be China owns it. Yes, and that's a problem. But at the same token, it is a pretty free platform, one we use a lot, and, not trying to, be one-sided on it. But I do get a lot of information from TikTok that does seem like it is the truth. So the other thing too that I want to hit as we kind of get to the end is something somebody said here, if I can find it. Somebody was asking me about a financial company. Oh yeah, right here. Bojo's Papa. It says they're investing money for me. They're asking about a financial company. So if they're investing money for you, ask them the strategy. If you want to know whether they're good or not, do they know your needs, your goals, and your risk tolerances? If you say, I'm scared about losing money, are they making actions to change? Are they looking for exits for you? Or are they just pushing through saying, oh, you got to invest for the long haul? If they're saying that, fire them. If they're making actual moves that are in your best interest based on your needs and goals, maybe they're not so bad. But they should have already started making moves. They should have already gotten on the phone with you within the last 6 months, trying to talk to you about what to do. So hopefully that's some helpful knowledge. They won't agree with anything I say because I'm not getting paid. They are. If they're not investing your money, they're not getting paid. Remember, you are feeding them with a paycheck. So therefore, it's your money. You make the call. And then somebody else said, should I buy or do I buy crypto? Yeah, you came in a little bit late. We talked about that earlier. Me and Steven, we dollar cost average into crypto. And when it drops, I usually take small little chunks of it.
I'm out right now.
I'm not fully sold on crypto at this present point. I'm just dollar cost averaging, thinking that, there might be some use. I mean, it's a good use, Ethereum and Bitcoin, and in the future, it might not be a bad thing to have, but I could lose all my money too. So I'm only playing with less, the money I'm playing with in crypto is money that if I lose it tomorrow, doesn't change anything for me. So that's probably the best advice, right, Steven? Anything you're going to put in the markets, anything you're going to dollar cost average into crypto or Bitcoin, make sure that's money that you can afford to lose. If you can't afford to lose any money, then don't Don't do any of that, because that's just, it's right now, it's far too risky.
Yeah, the money I'm playing with is money I've made on crypto in the past, and I'm for the record, I'm not buying anything. I'm not dollar cost averaging in right now.
Yeah. And that's probably
Um,
smart. I am, just because I said it and I forget it, and I'll continue to do it. But again, like I said, it's $200 a week. That money isn't going to change my life, my family's life. It's money that if I didn't have it, it wouldn't matter. So if it works, it works. If it doesn't, I won't say I shoulda, I woulda, I coulda. I'll just be like, well, I gave it a shot. And sometimes you make lots of investments throughout your life. Some of them pan out, some of them do not. But make educated investments in things like, and understand. It's the third law of wealth: protect your wealth.
yeah,
So,
I mean, the only other thing, Chris, I was going to share is I don't know if you want to talk a little bit about the gas prices and what's going on with that. I mean, gas prices drive so much, though. I mean, the prices that we're paying for everything. I mean, because things need to get places, which is all driven by gas prices. I mean, we have, travel right now with the airlines is a mess. So everything is still kind of, volatile out there, not only in the markets, but in our everyday lives with inflation through the roofs. And don't see a lot of people talking about that slowing anytime soon. So I just want to really, enforce the importance of, protecting yourself right now, understanding what is going on so you can make those moves and adjustments either within your 401k, or if it's, if you're in the retirement, maybe moving that money around a little bit to some other places. But, I really believe that things are going to get much worse. I mean, I don't know how much you want to get into this, but, this came out yesterday that Biden, he's overseas right now. Biden was counting on Arab nations to produce more oil. But a few hours ago, French President Macron was overheard telling Biden that the United Arab Emirates, the UAE, is at max capacity and the Saudis can't produce much more. It appears to be a direct appeal to Biden to produce more oil. And this is a nice little thread that kind of talks about it. But, he had a call with MBZ Macron. He told me two things. I'm at maximum production capacity and the Saudis can increase by 1,000 barrels a day, which is 150,000 barrels a day, which really isn't that much.
Not at all.
So this is a game-changing revelation since Biden was counting on Saudi oil and the UAE. They were the only two OPEC nations perceived to have spare capacity. Macron's revelation means that it's up to U.S. produce more oil and soon, or the energy crisis will get much worse.
If you really listen to Biden, and you listen to how much he bastardizes, oil companies, he makes them out to be villains, makes them, and maybe they're greedy, but like they produce oil. Let's just be real. And then he goes over to the Arabs, asking them to produce more, but they're at max capacity. Of course they are. Like, we're no longer getting oil from Russia. And now Eurozones, like all of Europe, for the most part, is not buying oil from Russia too. So Russia's a major exporter of oil, not the number one, but one of the majors. So now all the demand that we used to get from Russia, we're now trying to just go to the Arabs and kind of, come crawling in saying, hey, we need you to produce more oil. Like, excuse my language, but what the fuck happened to the United States? Like, weren't we energy independent? Like, I don't know, maybe it was a lie too, like a lot of the other things we see. But for what I remember, the United States is sitting on massive reserves of oil, but we're so concerned about global warming and everything else that now we're doing this massive pivot to everybody should drive electric cars. The grid can't fucking handle everybody driving electric cars. Just a little knowledge for you, the grid will crash. It can't do it.
Did you see what happened in Germany? I mean, they're like the leader of all this green stuff, right? Just a couple of weeks ago, they announced they're reopening a bunch of their coal burning plants. Like coal burning is the dirtiest production in ever. Like, but they painted themselves in a corner, and now they're stuck to having to do that, or their country's not going to function anymore. Like,
I did see that. I did. And it's like, global warming and everything else. Like, is it real? Is it not? I'm not an expert. I don't really even have an opinion on that. I'm sure there's some truth to it, but like, you can't pivot everything that quick, especially when there's things not ready for it, like the infrastructure. Like, now, like that stuff about Europe going back to coal, that is the worst possible thing you can do for the climate and everything else. I'm trying to think of the word I'm looking for, but that's the worst thing you can do. But when you put yourself in a predicament like that's all you're going to be able to do. Turning off AC in stores. Wow,
maybe all the businesses could do that to save on electric. Just turn the AC off. It's all good.
Yeah, that's a good idea. That person that came up with that should be fired. Anyway, but like, you've got to understand, like, we were energy independent. Like, we have oil on here. We have it. Like, we don't always need to like keep pumping it, but like right now might not be a bad time to like kind of go back and be independent again. Doesn't seem like the Biden's blame game is working so well right now. Like, blame everybody else. It's Russia's fault. Fix it. Oh, I'm going over to the Arabs to fix it. Oh, they don't have any more. We can't make any more. Well, you don't say. Like, it's just, we have the ability to fix so many of the problems, but we don't, because we don't have an administration that does anything to fix anything. All they do is blame and try to buy votes. And I'm not political, but you know what? From here on out, I'm gonna stand my ground. Like, because at first I'm like, okay, let's see how they do. They have failed miserably. So like, game over. Like, stop pointing fingers, stop blaming. That's all the dude does. Fix the problems for Americans. And fixing the problems doesn't mean go to the Fed and print more money so that our kids have to pay our debts back because you couldn't figure problems out that were much easier to figure out than just printing money so you can buy more votes, printing money so you can pay off college loans so that they'll vote for you, printing money so that you can have illegals come into our country, and most not good ones, cartel illegals come in here and create more crime. Like, there's so many issues that we have to fix, but we're not fixing them. We're just focused on, I got to get reelected. Such bullshit, man. And it has everything to do with the markets and with the economy, because you're seeing right now, they printed so much money, they created a massive problem. Now they're trying to fix the problem at the expense of every one of you, every one of your families, and every one of your financial futures. Welcome to 2022, and welcome to What the F Happened. It's going to get worse, folks. It's going to get a lot worse. Not trying to be a fearmonger, but if you can't see that we've got a problem, then you are blind and you don't belong here anyway. So folks, if you like this, make sure you subscribe to my YouTube channel at The Chris Naugle. We put great content out, usable content, tactical content that you need in these times. We will go live every single week, bringing you this show and 6 other shows that we do every week. Register for Wealth Webinar this afternoon. And until then, Stephen, anything you got to close?
No, stay safe out there, guys. It's a crazy world right now in the markets, so just be careful.
Yeah. Thank you, everybody, for joining us and for sticking with us. We'll see you this afternoon at 1 p.m. TikTok, Instagram, YouTube, Facebook. See you later.